All right, let's jump right into this explainer and unpack the massive mystery behind a streaming giant's recent stock plunge. If you follow the markets at all, you've definitely noticed the serious turbulence around Netflix lately. Today, we're digging into a really compelling investment thesis that suggests this recent drop, well, it might not be a red flag at all. Actually, it argues this is a classic market overreaction, one that's potentially created a massive discount for long-term investors. We're going to break down exactly what happened, why the price dropped, and uncover the underlying fundamentals that the trading floor might just be ignoring.
So right after their second quarter earnings report, Netflix took a staggering 9% after-hours plunge. Boom! Just like that, nearly a tenth of the company's valuation was completely wiped out in a matter of hours. The big question for us today is, why? Did the bottoms suddenly fall out of their business model, or is there a gigantic miscalculation happening on Wall Street?
It really all boils down to a massive disconnect. On one hand, you have Wall Street operating with major tunnel vision, basically panicking over short-term forecasts and minor little blips in user engagement. But on the flip side, you have the actual Q2 reality. Netflix just pulled in $12.56 billion in revenue. That is up 13% year over year. Wall Street essentially freaked out over the micro details while totally ignoring a quarter that brought in billions of dollars.
So, to figure out what Wall Street missed, our agenda today is going to cover. First, the 9% plunge. Then, we'll hit Pillar 1, entertainment value, Pillar 2, AI innovation, and Pillar 3, monetization evolution. Finally, we'll wrap it up with Section 5, looking at a disciplined entry point.
Okay, kicking things off with Section 1, the 9% plunge.
The core thesis we're looking at today argues that this violent sell-off represents a classic market overreaction. The idea is that by getting completely fixated on those short-term hiccups, investors are missing the forest for the trees. They are completely ignoring the incredibly robust, multi-pillar strategy that Netflix has built to drive global growth for years to come.
Let's move right along to Section 2, exploring their first strategic pillar, entertainment value.
Now, despite some seriously heavy global sporting competition vying for our attention everywhere, Netflix view hours actually grew by 2% in the first half of 2026 compared to 2025. This is incredibly significant. Even when the entire world was totally distracted by massive real-time global sporting events, Netflix's core product didn't just tread water, it actively increased its total watch time.
So how on earth are they pulling that off? Well, they're capturing the absolute most valuable moments of consumer attention by actively diversifying their library. A perfect example of this is the massive global success of their original animation, K-pop Demon Hunters. By branching out into high-impact series that resonate across borders, they aren't just relying on their old catalog, they're building exciting new cultural phenomenons that keep global subscribers totally locked in.
Next up is Section 3. Let's look at Pillar 2, AI innovation. You know that frustrating feeling of endlessly scrolling, just trying to find something decent to watch? Well, Netflix is actively leveraging LLMs, large language models, to completely eliminate that. These advanced artificial intelligence systems are revolutionizing natural language search and title discovery, creating an incredibly personalized, almost immersive user experience.
This AI evolution basically works in 3 phases. First, natural language search lets you find content based purely on a vibe or a mood. Second, the system develops this incredibly sophisticated understanding of your unique personal tastes. And the third step? Deeper platform retention. By knowing exactly what you want, almost before you do, they keep you absolutely glued to the platform.
Which brings us to Section 4, Pillar 3, monetization evolution.
$3 billion. That is exactly what the company is on track to deliver in advertising revenue alone in 2026. Evolving from a pure subscription play to this highly lucrative ad-supported hybrid model is an absolute game changer, and it's a massive shift that Wall Street's recent panic seemingly just forgot all about.
And to really turbocharge this ad tier, Netflix is aggressively expanding into high-demand live events. We were talking about the Women's World Cup, the NFL, WWE, the MLB, the whole shebang. Advertisers absolutely flock to these broadcasts because audiences have to watch them in real time, which makes those ad spots incredibly valuable.
Finally, we arrive at Section 5, a disciplined entry point.
Listen to this, because it is probably the most eye-opening, surprising metric of this entire explainer. Netflix currently holds just 5% of the global TV market share.
5%. That means 95% of the pie is still completely out there, up for grabs. This temporary price discount we're seeing offers a massive runway for patient investors to accumulate shares in a clear market leader that still has immense room to grow.
So, tying this all together, based on their undisputed entertainment value, their cutting-edge AI innovation, and that explosive live event monetization strategy we just talked about, you really have to ask yourself if Wall Street just handed you a rare opportunity at a steep discount. They panicked over short-term metrics, the stock price dropped, and they completely missed the structural juggernaut that Netflix is actually building. The fundamental strength here is undeniable. Will Wall Street's short-term panic become the long-term investor's ultimate prize? That is the billion-dollar question you should be taking away from this today.